Hi, I'm Kathy, and I run the Ningi and Caboolture offices. And I'm going to talk about some rorting and some scheming. Okay, so we've heard lots of information about lots of money that the government is giving away. So naturally, everyone wants a piece of it. Everyone wants what their fair share is, and which is only understandable given the economic climate and everything. However, there are integrity measures that the government has put in place to ensure that it is a fair system and that there is money for everyone for later on, sort of thing. Some of the things that the government has put in place, there are penalties, particularly for taxpayers and also for tax agents. So particularly with tax agents, we not have to answer to only have to answer to the taxation ATO, but to our taxation practitioners board. So we do have a lot of pressure on us to ensure that we are doing the correct thing, which we always do, but to make sure that lots of agents are doing the correct thing. Yeah. So some of the things, so you might be saying, well, what's a scheme, what's a rort? There's a few things that have to be in place for any of these, particularly the cash flow economic boost to happen. You have to have had a business, an ABN number on the 12th of March 2020. So you can't just go out and create a business, start paying wages and think you're going to get entitled to some of these benefits. So the business must have been operating by the 12th of March. It also needs to have derived assessable income from carrying on a business in the 18-19 income year. Now you can either show this by having lodged your tax return or lodging activity statements since the 1st of July 2018. You may be, if you haven't lodged your tax return, if you're on a lodgement list, this should still be able to be taken into account. The explanatory memorandum also requires that the entity has not engaged in a scheme or the sole purpose of seeking to make the entity entitled to cash flow boosts and increasing those entitlements. So the ATO has prompted a few things by saying you can't restructure your business suddenly, sort of thing. You can't restructure the way you would normally pay your workers. You can't sort of increase your wages in a particular month just to maximise these cash flow boost payments. So what they'll be looking at is what you would normally be doing to see if there's any diversion from those facts. Now that doesn't mean that you can't do things, because in any business there's always something that comes up. You might have started employing a person legitimately, sort of thing. Your business is going really well, and there are businesses that are going really well at the moment, sort of thing. And you want to put them on as wages, you're entitled to do that. You might also be having a business that has been doing really well. You might not have been drawing wages from it in the past, but now you might have used up all those carry forward losses. You've now got profit in the business, so you're now able to take wages out of the business. So as long as you've got legitimate reasons for doing what you're doing, we don't believe there should be any issues. Now you need to back that up by making sure that you're doing things properly. So you need tax file declarations. You need to enrol in the single touch payroll system. You need to make sure that you're paying superannuation for your employees. So all those things add and show that what you're doing is legitimate. So if you're not doing any of those things and you suddenly pay $50,000 in wages with a huge tax bill in the Q3 and then nothing for future, then yes, that's going to draw the attention of the tax office. So once again, we believe that as long as you're doing things legitimately, you should be fine. A lot of things, there also might be the temptation to put everything into this Q3 BAS, purely because we need the money, we want the money, we have to have the money now sort of thing. But normally it might be your accountant that does things in the Q4 activity statement. If you bring those forwards, those things forward, then you're probably running a risk. So it's best to keep things happening as they would normally happen. You know, bring those wages into the Q4 activity statement when your accountant would normally do those things. What about family members that are working in the business? They do work in the business and they do get paid for doing things. So now, and they want a share of the profits. You may not have been doing that in the past, and there's that temptation to put people on to wages to do that sort of thing. Once again, you've got to make sure there's legitimate reasons for doing it. You might now be in that position that you can start to pay wages and start to pay superannuation, and you want to do things properly sort of thing. And that can be a legitimate reason for doing it sort of thing. Is it a scheme? Is it the dominant purpose for qualifying for the bonus? We don't think so, because we're doing things legitimately sort of thing. As long as you've got a legitimate reason for doing it, we believe you're okay. There is always a risk that the ATO may come along and say you're just doing that for the dominant purpose. So as long as that's where you're backing yourself up by what you're doing sort of thing. And, you know, make sure you've talked to your accountant. You know, make sure you've looked at your profit for the year. Make sure there is enough profit in there to pay yourself a wage. All those things. For the JobKeeper payments, we believe there's similar anti-rort rules in process, in place. They look to make sure that you're not doing it for the dominant purpose to obtain or increase the JobKeeper payments. One of the things might be that instead of paying yourself a wage, you might be legitimately entitled to take the JobKeeper payment, particularly if you're a director of a company or a beneficiary of a trust. So rather than risk the ATO looking at you when you're just declaring wages, then maybe the JobKeeper payment is an alternative. And it's also just important to remember that it is a criminal offence to make false and misleading or reckless statements. So we don't want to make sure that you're doing those things. Yep, so seek your accountant's advice before you do any of these things.